I think we are live. We are live. What's going on, everyone? Welcome back to the channel. Welcome to the Let's Build $1 Million Company. I gotta get a name for this. Anyways, this is a live stream, daily live stream, Monday through Friday, where I just talk about what it is that I'm doing to build a business that is going to hopefully generate $1 million in revenue every single year. So just documenting the progress, basically. And today we're going to talk about finances and kind of let's get an overview as to where we are as a company and see how we're doing. And yeah, just kind of dive into it. Because I haven't really, like, to be honest, I haven't spent too much time on figuring out exactly kind of where we are and how well we're doing and if we're doing well. It's a little like one thing. I think this is from what Warren Buffett says, or kind of what he does, is that he really knows how to read the financial statements of companies so that he can gauge whether they're doing really well or not. And I don't know how to do that. I don't know what what to look out for. I guess there's, some major easy things, looking at the profit and loss sheet to see, obviously if they're making a profit. I guess you could look at the balance sheet. And I guess a statement like a cash flow statement as well is good to see, because you could still be making a profit, but if you don't have cash flow, you could be running into problems as well too. I think a way to think about that is if a company, if you send off goods for people to buy and then they might not pay you like net 90 days or something like that, but yet when you have to pay your bills, you have like a net 30 day. So your bills are due way faster than you get paid. So you can have like a negative cash flow. So that could be really, really problematic. So you could be doing well in business, but if you don't have enough money to keep your cash flow going, to keep your business alive, you can run into problems. So, but other than the basics of what these sheets kind of do, I'm not that adept yet at understanding how to analyze a business. So at least maybe let's take a close look at where we're at right now with Pixel. And then, I don't know. I just go from there, I guess. Maybe we could do some spreadsheeting, I think. Let's have a look. Actually, there's going to be some things that I don't know if I'm going to want to show or not, but I want to make sure that I don't show any like customer data or anything like that. That's the only thing that I'm really concerned about. So let me just go into, actually, you know what I didn't do? I didn't do this for comments. I'll turn that on and see if that's good. Okay, hasn't gone through yet. Okay, there we go. We're good. So let's see. I need to make sure, does this work? Okay, that is going to work. Okay, perfect. I have to go back. There's still some things that I still have to do in terms of getting OBS and getting the live stream in a better state. Just dealing with the comments and the way it looks, and maybe setting up different cameras or so. I don't know. Anyways, okay. So what do we know? Okay, let's go. Let's go in here. Let's zoom this in a little bit. Okay, that looks pretty good. So like, let's say start date. I think Pixel incorporated September 15. I was going to say 2015. That's weird. 2022. And, I hate that format. Date. Yeah, let's format like this. And yeah, we can keep that there for now. So there's two different dates. There's the date that I started and the date that I first got some money, but that's okay. Well, yeah. Okay, we'll see what we want to do with that later. Okay, let's go in. Oh, you know what? I need to put on some music. Where's my Spotify? Okay. All right. So, what do I want to do? So one thing I want to figure out with this is kind of think about how to do like a monthly recap of finances and what would be a good way to go about things. I'm not sure exactly, but maybe today will give us a little bit of an insight as to how we might consider doing a monthly financial review or audit or something of the company. Okay, so let's go to our reports here. And actually, just real quick before I do that, let me just... Oh, okay, no, that's fine. Okay, I could just show that. I think... Yeah, that is perfectly fine. Let me just close a few of these things up. Okay. So if I go... Where do I go? Is it here? No, that's not what I want. No, that's not what I want. This is what I want. There we go. Okay. So this is the profit and loss sheet. And this is what, pretty sure this is what we've done. Yeah, fiscal year to date. And the fiscal year is from September to September. But we're just going to today. Okay, so far, this is how much income we've generated. So let's copy this and let's put this into here. All right. Total income generated. Okay, can I just paste this as just not special? I want no formatting. Is that Control Shift V? Control Shift Alt V? Paste special. I just want the text. Thank you. Okay. So we have our total income generated. What else do we want to, what else can we look at here? I guess we could look at our expenses. But what do we need to know about our expenses? I mean, we could just take this number for starters, our total expenses. Actually, before we get to that, where can we put that? Actually, let's put it here. Total expenses. And paste text. Okay. So this is total income generated, but there's a couple things that I know that are coming into the books. So outstanding. So there's an outstanding invoice, or how much money is coming in. And these ones should be paid within the next probably month and a half. I should maybe just say outstanding contracts. Maybe that would be a better, because some of them are invoices, some aren't just yet. So outstanding contracts, I am going to say are about this much. Yeah. Yep. And then there's also how can I put this? So basically there's a yeah, okay. So I'm working with a client right now to negotiate a contract for just kind of more of a long-term contract, a long-term partnership where I will be managing the entirety of their web presence. And so we initially agreed on this amount, but it might end up going as high as this amount. Oop, that's not a number. Based on like requirements, basically. Minimum, maximum. So one of these are going to get resolved hopefully within the next couple days, and I'll know for sure what's going to be coming in. And recurring revenue. I have two. Just say monthly. So there's that much recurring revenue monthly. I don't even know if I need to put this in, if it makes much sense to go in. Oh, geez. I am, once again, typing things in, not showing you. Okay. So yeah, this is a negotiation. That's the minimum, or this is the maximum. So recurring revenue. Then I have recurring revenue as well. That is yearly. I don't know if it makes sense to put this in here because most of that right now is to cover costs of hosting plans, which are part of my expenses. Oh, actually, this is wrong. This is $350. Okay, and then recurring revenue, yearly, monthly, yearly. Yeah, I'm going to just put that away for now because I'm not sure. Well, okay, no, let's estimate. So we have 2, 1, 2. It might just be 2. Oh, $600 a year. Not very much, but every dollar counts. Okay. So I don't even know what it is that I'm going to want to calculate here. Okay. So total income generated. Okay. So let's say yeah, I guess what I'm trying to do is maybe have a little bit of an estimate for how much money I maybe will be making in the span of a year. So let's say total income to date. And that's the low end. And then we want also the high end, plus this, plus this, plus this. Then we'll just leave the recurring revenue as is for now. I mean, I guess these ones could be recurring total. Let's just calculate this right now. So that equals this. Actually, let's go. No, I probably don't need that actually. Times this. Plus this. Okay, so let's. Can't even really add this because it's not a full year, right? You know what? Let's leave it without. Okay. So this is the total money that they all haven't hit the books yet, but the potential, all the money that Pixel has made to date. And how do I calculate days till today? Or days from today? Let's go here. Calculate. Like this is Excel. Like days from today. Right. Oh, that's today function. Oh, can I just really do that? Is it really that easy? Okay, so this is gonna get musty really fast. Days since start of business equals today minus this. No, that doesn't make sense. Or is it the other way around? Equals this minus today. That also makes no sense. Okay. Formatted answer. The number of days between two. Today's date, future date. Let's return the current date in the cell. Between the start date. Yeah, this is what I want. I just got to change the date to number. Okay, well, let's try that then. Equals today minus, what was it, A2? And change that to a number. A whole number. Which is general. Okay. So is that right? Let's try days since a date. I think there's a date duration. I must have done this one before. September 15th, 2022. Calculate. 229. Okay, cool. So that's correct. All right. Because what I want to do is I want to calculate or extrapolate how much money I make per day. And then I could extrapolate by 365 or multiply by 365 to get the amount of money I make per year. Or I estimate how much I'll make per year. Okay, so this is daily income equals this divided by this, or on the high end, this divided by this. Okay, so yearly projected income revenue equals this times 365 equals this times 365. Okay, so according to my numbers, this is my yearly projected income if things stay on pace as they are now. 135K to 159K. Now, that's not bad. I don't mind that for the first year. If I end up hitting those numbers, and to be honest, even just hitting 100K, 6 figures, which is 10% of the 1 million, that's not bad. I will definitely take that. So that looks pretty good so far. Does that make sense? Does this calculation make sense? Now, of course, that's just income. That has nothing to do with the actual profit, right? Because if I look here at my profit, it's $34,000. So, and then of course I need to pay myself money to live. So, so this is how, I guess I could explain how I'm getting money out of my corporation and into my own pocket. So the first thing that I do is, okay, so I think this is important to understand about kind of my philosophy right now as I understand it. Or as I understand kind of the tax world and all that kind of stuff, living here in Canada, being probably one of the most highly taxed countries in the world, is, well, I don't like paying taxes. And I'm trying to avoid that as much as possible. And of course, doing it 100% legally. So I know in Canada, there's a certain threshold of money that you can make that'll be tax-free. And you know what? Let's look at the Canada tax code. Income tax. Personal income tax. Let's just look at this here. Tax rates. Yes. Federal tax rate for 2023. Okay. Okay, so you get 15% tax on anything you make that's above $53,000. So what about below that? Okay, these are just different provinces. Is there a calculator? There's got to be a calculator here somewhere, no? No, I don't want that, like a tax package. Federal tax rates. Oh my goodness. Oh my goodness. Okay. I think this is the number that I'm thinking of. Yes. Okay. So this is the basic personal amount for individuals whose net income for the year is less than or equal to the amount at which 29% tax bracket begins. Okay, that sounds, what statement? What does that even mean? Increase basic personal amount. Basic increased 15,000. Okay, net income is greater than the amount. Right. So what I think this means is if you make less than $15,000 than this amount here, you don't have to pay any taxes on that. That's what I'm reading this as. Right, and then this goes up depending on how much money you make. Okay, all right. So now, if I make 15 grand and like that's it, or you, anybody here who lives in Canada, if you're making that, hang on a second, let me fix this thing here. Okay, that's a little bit better. Okay, so if anyone who's watching whatever lives in Canada, if you make 15 grand, you can keep all that tax free. Of course, you have sales tax whatever on things that you buy, but at least with your income is tax free. So there's two of us. So theoretically, I can make 15 grand. Andrea can make 15 grand, and together we can make $30,000. So in one of the videos I've done before, and maybe we'll swing back to it at some other time, probably not today, is we know that in order for us to have our standard of living that we are, accustomed to, which is not very much, we need to make, I'll put it in here, actually. I'll put it in my spreadsheet. So total monthly income to live. So we need to make ooh, that's a weird way to write $3,000. We need to make $3,000. So that translates to equals this times 12. That translates to $36,000 a year. So if I can make $15,000 and Andrea can make $15,000, we could, we're only missing $6,000 in difference in terms of what money we need to live. So maybe that can change in budgeting or whatever that is, if we can find wiggle room. But the point I'm trying to make is right now, Pixel, I've hired Andrea and she does work for Pixel, and she's a contractor. So she does work on Pixel. She helps with the finances. She helps with administration, all kinds of stuff. And she gets paid $15,000 a year, or $1,250 a month or something like that. Whatever. She'll get paid $15,000. And then for me, I take salary out as a dividend payment. So I pay myself a dividend of whenever I need money, I'll just pay myself a dividend and just make sure that I don't go over $15,000 for the fiscal year. Or is it the fiscal year? That's more for the tax year for me. So this year, 2023, I can extract, sounds like weird. I could pay myself $15,000 from the business. So that together, combined, we make $30,000 after tax, right? Or tax free. So that's $30,000 cash, which is, what is that? It's like $2,500 a month. So in theory, with our budgeting or whatever, we're short $2,500 a month. But if there's ever anything that we need or whatever, then that's not a big difference at all. And if we do need to take out a little bit more, then we certainly can. And there's probably some few like tax incentives or whatever that we could probably get, considering that we have 2 kids and all that kind of stuff. So there's some tax incentives that we can collect on. So that's good. So that's how I'm trying to minimize how much tax we pay. And then of course, unfortunately though, with the way that the tax code works for businesses is that a business needs to pay tax on whatever rate. It's like about 15% on the total profit. So I'm going to have to pay 15% tax on this $35,000, which is so it's so disheartening that has to go to the government. That's even just for what is in the bank right now times. That's over $5,000, and the government is going to put that money to great use, of course. There was something that I saw the other day. It was so hilarious. I think it was just a YouTube video, so something I heard. Well, I don't think. Okay, I was watching a YouTube video. I was listening to it, but I was watching the actual video, so I heard it. Anyways, the point is, the one guy, he was talking about how to teach your kids about. It was just really funny, just like about capitalism. And if it's good or bad or whatever, versus, more socialism or whatever. And it's like, okay, it's like how to teach this to your kids without going into, heavy politics or whatever, any of that kind of stuff. You just want to teach them kind of life lessons. So he made a thing. It's like, okay, when you have your kids, don't just give them money for them not to accept money, to just expect money. So no allowance or anything like that. And instead, just say like, hey, if you're going to mow the grass or mow the lawn, you get $10, or you're going to do the dishes or whatever, you're going to get $10. So whatever things that they can do for money, they'll do the thing, and then you pay the money, right? And so you start giving them the $10, and then to teach them a lesson, I guess, is say like, okay, well, after that, now you're going to get taxed at, 40% or something like that. So you give them the $10, and then you take out $4 and say, this is mine now. And then and then they'll see physically that they did the work, but then 40% of their, whatever they earned gets taken from them, right? And say like, that's what tax is. And then it's like, how many people are going to be planning for taxing more people or whatever like that, right? You just show them what the actual real world consequences are of taxing, whether it's good or bad. That's a whole nother question. But it's something so that kids can kind of understand the concept of what it means to be taxed and what it means to be working hard for something and then to have something taken away. And then it was really funny because this guy was like, if you really want to do something crazy, because I think he was saying like, oh, you just tell them, oh, we're going to use that money to buy something good. Like, don't worry about it. We're going to get you something really, really good. And then there's like, well, and if you really want to rub the salt into the wound, just take that money and buy them something that they absolutely don't need, and just say like, this is the best thing ever, and just buy them something that they absolutely don't want or whatever. So I thought that was really funny. But at the same time, it's sad because I guess the point of what I'm saying is if I have to pay $5,000 to the government, it's less money that I'm going to have to be able to get to my goal of being able to hire somebody and bring somebody on. Because $5,000, that I could hire a contractor to do a whole lot of work for me for $5,000. Like, that's a lot. So, and that's just the money that's in the books right now as well too. So there's more coming in, and then that's going to be taxed. So how do I lower this? Obviously, you could up your expenses, but at the same time too, I'm not just going to spend money for the sake of spending money. But this is where I have to figure out, how do people or other companies, play around with their expenses so that they can kind of minimize their taxes. And I don't know if they can do this through holding companies or whatever, because we kind of talked about this, about having a holding company where this profit can get passed on to another company. So this company in itself isn't seen as making a profit, right? Because it's making a dividend payment. But I don't know if that happens before tax or after tax. I don't know. Something to figure out. I'm going to have to really kind of start to understand this kind of stuff. But for right now, it's just trying to make as much money as I can and not really worry about saving on taxes right now. Because right now, if I could just make more money, then I'll just make more money. 15% tax rate is not so bad. But the real problem comes in is if I have to pay myself like a salary or whatever, then you got to pay into the pension, the CPP, and the EI and all that kind of stuff. And like, no, thank you. No, thank you. I don't want to pay into any of that stuff. And you got to pay it twice, because you got to pay it you as a person, and then the employee or the employer has to match. So you have to pay like the pension fund twice. Anyways, so yeah, that's a profit and loss. So what else can we take a look at? You know, to reports, I think we can look at our balance sheet. So even if I could, going back to this profit and loss here for a second, we can kind of take a look at and see where our money is coming in. So there's audio, video production, and event management. So that's $10,000, or maybe like 60, or almost 1,100. So 10,600. So, but a good chunk of it, about a little over half, has come from creative consulting work. And then there's also some with website development, 15K, and then website hosting. Right, so a lot of consulting work, which is pretty big, and website design and development as well too. So, but it's, so I was talking a little bit yesterday about kind of trying to figure out, you know, where Pixel can go and where Pixel should go, and if we're headed in the right direction. And I mean, with the majority of the money coming in from consulting, and that consulting really stems from a lot of, actually, I was going to say a lot of more web design stuff, but no, it was mostly just general creative work, which is kind of why it fell under there. Okay. So that's the income. But yeah, so this can definitely get higher as I reach out, and I got to do some marketing. Haven't done anything yet for marketing. So that can go higher. But this is going to go up as well too. Yeah, it's tough to say. It's tough to say what the market is wanting. There's a lot of overlap. Maybe it's just like a mix of everything right now, anyways, is what I'm seeing. Okay, expenses. So yeah, that's payments. Those are payments to Andrea. A lot of these things, I probably won't see that much in the second year, or even the rest of this year. Like a bunch of gear, you kind of just get that and you buy it and then you have it. Computer hardware, that was like buying the new computer, so that's not going to be happening anytime soon. Another computer, just contracting out to help people or to help me with development. Fees. You always got to pay the fees. It was almost $1,000 in fees. Office furniture. Again, you kind of buy it and kind of forget it. Well, not forget it, but what is it? Set it and forget it. You just buy it once and then you kind of have it, right? Subscription services. This is the biggest thing that I spend my money on, and that's not going to go anywhere. That's going to keep going up. This is like the cost of business. This is crazy. So Adobe, oh my goodness, they get so much of my money. It's almost $500. Amazon Prime to get stuff here. Surprising how many times that I need something for a client and I need to get something delivered ASAP. If I was in Toronto, it'd be nice because all the stores that I would order from are in Toronto, but Amazon just delivers faster. Artlist for music. Asana is expensive. Fathom, okay. Email, MailChimp, yeah. MemberStack, oh geez. Podcasting, I had to figure out what to do with that because the podcasting, just to host it, is costing me money. Vimeo. Webflow is big. I need to recuperate my costs. I'm spending $1,500 in Webflow so far, and I've only recovered $800. So about half is just not recovered. I'm gonna start billing people. What else do I got? Yeah, Zapier, more Webflow stuff, and Zoom. Yep. Utilities, cell phone, internet. Yeah, those are going to be recurring. Nothing I can do really about that. And yeah, not much for vehicle stuff. Yeah, so I mean, there might be a reduction. Again, computer stuff, $5,000. That's not going to happen very often. So yeah. I mean, if I bring in another, $50K in revenue, there probably might be another 5,000, maybe 10 in expenses. So a lot of things that come in are just pure profit, which is really nice. It's really nice. Yeah, like if a website comes in, someone wants a website for 10K, I just make the website, and that 10K is just pure profit minus the time it takes for me to, do it. So it seems to be going well. Reports. So balance sheet. Right. So the balance sheet shows kind of how much money I have. Right. So these are my bank accounts. And this is how much money is in each bank account. So this tax is money that I set aside for HST, the GST that I collect, and then also for the extra tax that I need to pay on, the money that I make. So I probably need to put a little bit more into here because I think there's more What's the HST? Is it going to show in here? Yeah, the HST liability right now is 5,200. So that's only 52. That's only 2,500 extra, and I owe 5,000. Yeah, so there's more that needs to be put in here. So I'm gonna have to up how much I save for tax. Okay, so balance sheet. What is a balance? So fiscal sheet. So what is a balance sheet? Balance sheet definition. A balance sheet is a financial statement that provides a snapshot of what a company owes, as well as the amount invested by shareholders, the company's total assets, debt or equity, statement of net worth. Okay, so you want to have a good positive balance sheet, I guess. So let's take a look at what this says. So our current assets are cash, 25K. Non-current assets. Right. So this is right. So I got audio, video equipment. That's what that's worth. Furniture. And what is computers? Okay. Right. So the idea here is if I sold all my equipment, this is how much I guess it would be worth. Right. That makes sense. So my non-current assets. It's a weird way to put it. Okay. So it's 11,000. So our total assets are $36,000 right now. So if we were to liquidate the company, I guess this is how much cash we would have. And our liabilities. Okay. Credit card. It's -1. Okay. What the hell's... Oh, right. Okay. I'll just show this real quick, I guess. Let's go to, I guess this is the dashboard. No, not the dashboard. Just banking, I think. Right. So here are the accounts, and there's just a bunch of transactions that haven't been updated yet. So, and I think I made a payment to pay off the balance. And so things are just not quite in sync yet. But once all these, transactions are added, then it should... balance to zero. And also the payment hasn't hit the books yet on Amex, so that's why there's a weird number here, but this should be zero. And it will be zero, which will mean that our liabilities will be higher than what this says. It'll be 5,291, which is what we owe to GST. Okay. So that's all we have in liability. Oh, no. So that's what we have in liabilities. And equity. Okay. Now this is where I always get a little bit confused. Okay. So this here, what does this say? This owner contribution, this is the dollar value of the money of the equipment that I brought into the company when I first started. And these are expenses that I made with my own personal credit card when the company started. Owner purchasing, yeah. So, and this money here, 14,000, that should be this. Yeah. That's money that when the company made that money, I transferred it to my personal account to kind of square this away completely. So, and this is just here making a dividend payment. So, but why does it show the equity? So why is this the same number? I don't know why that's the same number, because yeah, I have no idea. If you add these together, is it the same? 3, 4, 7, 8. Yeah, that's the same. So equity plus liabilities. Let me just double check here. 33,513.9 plus 3370.98, 36,784. So that's the same number. How does that end up being the same number? Or is that just a coincidence? No, it can't be. Yeah, okay. How to read a balance sheet. Let's try the first one. There are a few financial statements more important than the balance sheet. Okay, so let's understand it. Potential investors need to decide, right? Craft a more effective strategy. It's an essential financial accounting skill. Well, you heard it here first. Balance sheet is a financial document designed to communicate exactly how much a company is worth, the book value. So it's just a tally of the company's assets, liabilities, and owner's equity. Right. There's distribution. Okay. Provides a summary of a business at a given point. It's a snapshot of a company's financial position. Right. Give insights into whether the company is succeeding or failing. So I guess having a balance sheet of 36 whatever, that's pretty good. Now, is that going to be the same as the profit and loss right now? What's the profit? Okay, there's so much stuff here. Just close all this. Profit is 34. Okay, equity's higher. Okay. So they're not the same number. Is that a good thing? I don't know. Okay. How they were financed. Ooh, I can calculate liquidity, profitability, reporting laws. Oh my goodness. By its very nature, is always based upon past data, right? Assets equals liabilities plus equity. So assets. So if the assets equal, what does it say? Liabilities plus equity. Yeah, liabilities plus equity. Wait. But then how do these numbers get to be the same? Because this equity has nothing to do with like how much money is in the bank, right? the only way of organizing information. A balance sheet should always balance. Assets must always equal liability. Okay, so so then it's a good thing that they're the same. So assets must always equal liabilities plus owner's equity. Liability. So assets equal liability. But liability is negative. Like this liability here, like I owe this amount, right? From what it's saying. From the GST. So why am I adding in my equity? An asset is defined as anything that is owned by a company. Makes sense. Non-current asset. Land, patents, equipment, right? Liability is something that I owe, right? So yeah, I owe GST. Anything that belongs to the owner of a business after any liabilities are accounted for. Oh, maybe that's what it is. It's taking up all this money. 36. No. It's not taking that. It's not taking 30. Oh, yeah, it is. No, it's not. If we have all the resources, the assets, subtract the liabilities. That's the equity. Oh, yeah, that does add up because that's 36. All the assets minus this gives you equity. But it looks like that equity is calculated from this number, though. Right, like they're all these things put together. Right, because profit is at the end of the day. And that's from the profit and loss, right? The 34. Yeah. Okay. Okay, here we go. An example. By looking at this example, you can extract vital information about the health of the company. Okay, let's take a look at this. Let's see what we can come up with here. Can this not go? It's going bigger. Okay. Okay, so this is from November to November. Okay. So what can we see out of the grant? Okay. The non-current assets. Okay, what's the difference again? Non-current assets are things, like property or whatever. Okay, so maybe they own some kind of brands and they've reduced in price. Leaseholder rights. Capitalized expenditures. That has something to do with capital gain. I don't know if they purchased lots of equipment. I guess it goes under there. They got more equipment. Deferred tax receivables. Yeah, well, they have more assets anyways. Or more non-current assets. I don't know what that means though. This brand decreasing, is that worrisome? And customer relations are decreasing and leaseholder rights, those are decreasing. But then the tax is increasing. I'm not sure what that even means. Current assets. So more inventory, a little bit less in accounts receivable. Maybe that's good. Short-term investments. Cash. So that's about the same. So retained earnings, I think that's the profit of the company. Accounts payable. So what does this tell us? The reporting period. Yeah. Okay, yeah, it tells us that. Those are just things. But what is it? But what does it tell us about the company itself? That's what I'd like to know. Like, yeah, it tells us this static information, but what does that actually mean about like the health of the company? It doesn't answer that, really. Like, what does this tell me about the company? That's what I would like to know. There's got to be something that you can take out of it. Like, I mean, it looks like it's making money. It's making 45. Again, I don't know if these are like extra zeros that are added. Like, these are like millions of dollars. It's unclear. But having a lot less in reserves, maybe that's a little bit worrisome. I don't know. I wonder if this... I don't want to watch a video. Maybe understanding balance sheets. So I want to analyze a company balance sheet. Okay, maybe this will help. Balance sheet analysis, blah, blah, blah. Both tools used to evaluate a company's financial performance, but they provide different information. Yeah, balance sheet is a snapshot of their financial position. Company's liquidity, right? Ability to pay its bills, right? Because your profit and loss, like the profit and loss, like if we look at this here, like that's 35 grand, right? But I don't have that in the bank, right? So you don't know how much liquid actual cash you do have, because I don't have 35K in the bank right now. I think it's like 20K. So that's a big difference. That's a $15,000 difference. So you might not be liquid, but that's where, if you look at this thing, you can look at the current assets. Okay, well, yeah, it's 25K. 20, yeah, 25. So is it, what did I say? Yeah, it's a $10,000 difference. Okay, so that's interesting. A solvency. Shows company's revenue expenses. So you want to be both profitable, and you also want to have liquidity and able to pay your bills. Right. They can see how well the company is generating revenue, controlling costs, and growing the business. And you control costs by the expenses. Yeah. Okay. I need like an example. Okay. If anybody's watching this, if you're like an accountant, I would love to hear what you think and what kind of information you can glean from my profit and loss statement, and my balance sheet. That would be really good to know. But I do know the business is going well, because I can still pay the bills and I have money left in the bank. That if I need to keep withdrawing a little bit, if I need to withdraw $2,500 every month, I can do that for 10 months now, without, getting any new work or anything like that, because I got that much in the bank. Actually, that's a lie. That's a lie, because $7,700 of that is for taxes. So that's a little bit of a lie, but anyway, so, I have a good chunk of liquidity available to me. So that's good. Right. What else? Is there anything else we want to say? So, what else can we do with this information and these numbers? So I like this. So this is my total income to date, approximately, using two different metrics. Not two different metrics. Two different contracts that one of them is about to come in. It's either going to come in at 15K or it's going to come in at 30K. I need to find out. Did I? No, they didn't message me. So I'm going to have to touch base tomorrow to find out what's going on, because I would like to have anything. I'd like to have that sorted out sooner rather than later. Okay. And that also, that's also pure profit too, which would be really nice. Okay. So I think originally my goal was to generate 125K, which is still my goal. If I can reach 125 this year, or by September, 15th or 14th, whatever. If I can reach 125 in total income on the profit and loss statement for income generated, that's a win. That's going to be awesome. That's going to be amazing. So $100,000 was kind of the low end, and 125 is the high end. So if I can get to that, that would be amazing. And then the next year, in 2023/2024, I guess, I want to double that to 250. 250 to even, if I can push, tripling that, so I can triple the amount of revenue. So that's 3 times, that gets up to 450. That would be nice. And then year 3 would be like the $1 million. That would be amazing. So that's kind of what's in my head. Maybe I should plan that out a little bit better and maybe do a little bit more planning around that. But I think I need to do some planning around solidifying the services that I'm going to offer and figuring out how much those are going to cost, and maybe some of the products as well too. Man, selling products is like the way to go, because then you just have something, you know how much it costs, and you know how many you need to sell to get to where you want to be, right? I did that before. I did that earlier, of thinking like just reverse engineering how many you need, right? If a client can pay you $5,000 a month or whatever, how many clients you would need to get to $1 million? And it turns out to be not that much. So yeah. But this clients that I have that are going to pay 10, 20, 30K a year for dedicated creative services, maybe even more than that, would be amazing. And I feel like maybe that's could be a good niche to go into, as opposed to like just straight web design where it's content creation, but everything's part of that. It's tough to say. It's tough to position. Yeah. So I have people asking me for a video, and then, we need to do a live show. How can we, live stream the stuff? We want to record it. We have like press releases coming up. How do we record that? How do we share that? So lots of stuff to do with cameras, lots of stuff to do with audio, video, visual production. Content creation is always going to be huge. As far as I know, they don't have any AI robots coming up that can shoot people's, YouTube videos and whatnot, create people's courses. So that's a good avenue. Yeah. So I'm talking less about finances here, just more thinking about the direction and the future of Pixel and what I might think about doing. But I think the bottom line is I have a good runway here to be able to spend some time and really figure it out and really make sure that I'm definitely going in the right direction, right? Yeah. Yeah, so we're in a good spot. I'm happy. I'd love to hear what you think about these numbers. And good, bad, could be better. Whatever, just let me know. As always, just be completely honest, be blunt. And I think the thing that gives me the most excitement about this is that I have done 0 promotions whatsoever. I mean, aside from doing these videos, I've done no marketing. I haven't, I got those business cards. I was designing those business cards. I haven't even finished them and I haven't even printed them yet. So I got to get going with that. So all of this stuff that has come through has been through word of mouth and my previous contacts. So that's a good thing, I think, because once I get myself out there, I think I can generate a lot more business. So yeah, I think that's good. I think we'll leave it there. I wonder, there'd be a place. This is where I'm still debating about what to do with my website, because I'd love to just post up my profit and loss and balance sheet and maybe other stuff, a cash flow statement maybe, just for other people to see, to get kind of, get that overview of the company and what I'm doing and how it's working. Just some numbers to follow along with the actual business with these videos. So I'll figure that out. I'm going to figure that out and figure out what to do and post stuff up somewhere for people to see. I don't know, because I like to share. I don't know. Sharing. What is it? Sharing is caring? Oh my goodness. Too much Care Bears. The Care Bear stare. Many of you older kids. I'm a kid of the 80s watching some Care Bears. Good stuff. Okay. Right. Yeah, we're good. Okay. We're going to leave it there. We're going to leave it there because I'll probably end up going down a rabbit hole and no time for that. Tomorrow. What should we do tomorrow? I don't know. We'll have to see. My son actually just got back from the hospital because he had all his wisdom teeth taken out. He's got the ice wrapper around his jaw and, he's in the car. Just getting off the drugs or whatever, just talking funny. So we'll see how he's doing. And yeah, but tomorrow, what should we talk about tomorrow? I don't know. I admit it's been a little bit, it's been weird taking time off. I did not like taking that time off, at least from live streaming, because I felt like I was just getting into a rhythm, whatever. And then it stops and it's like everything breaks loose. Like, yeah, I don't like it at all. So I need to figure out, whenever I got to go anywhere, that I can still work, because I love doing it. It's like I need to do it. I don't like not working. It's really weird. The kids and everyone else, yeah, have a vacation, go nuts. But for me, I gotta work. I gotta keep going. I gotta keep feeling like I'm moving forward. So, yeah. So what are we gonna do tomorrow? I'm not sure, but it'll be fun. So I hope to see you there. Thank you for watching. Thank you for tuning in. Please let me know what you think of our of the money, of the balance sheet and the profit and loss. Can't wait to hear your thoughts, and I'll see you tomorrow.